Hello, everybody. This is Andrew. I'm here having a chat with Ardi, and we want to talk about a hot topic these days about the market pullback or market crash. Specifically, one fund that is was very well known last year, ARK by Cathie, which is the disruptive technologies. One of the things and comments that I've read recently, actually an article very recently, that you see actually here, and it says the Cathie ARC lagged the Nasdaq since 2018 while they're collecting over $200 million in fees, and that's, to me, when you read this news, that's bizarre. That you can't even beat the market and collect $200 million. What is it about Ardi? Can you tell us? Is it a scam that they're running this actively managed fund, but they can't even beat the market?
Yeah, it's so interesting, Andrew. When you showed me this article, and I think the first thing I said is it's a classic hit piece because they really smartly, exclusively selected from 2018 to now, and that's how it kind of tailored their data to show that she's done such a terrible job. I mean, does active management beat passive investing? That's a totally different conversation. We could do an episode on it, but I think in defense of Cathie Woods, which is really hard thing to do these days, is her mandate is a 5-year time frame in disruptive technology, and yes, true, from 2018 she's lagged, but if you look at her since inception in 2016, she's actually beat Nasdaq by a really wide margin.
So
So
let's take a look at it. Actually, I like to see that. So that's the chart that compares ARK and Nasdaq. So the orange line that you see is the Nasdaq, and the blue one is ARK. And they're right. The article is actually right. So starting from 2018, if you start right from 2018 here, what you see here, ARK returned 115%, and QQQ returned only 145%, and that's a huge lag that they have. But what you said is, they handpick this data, and what's the time frame that we should really look at?
yeah, you should definitely look at since inception, since
So
her 5-year time frame,
yeah.
because that's how she makes her fundamental models is based on 5-year assumptions. And for anybody who's interested, if you have a GitHub account, you can actually go to Git and download her models. She actually put them for free because she wants to kind of get challenged. She wants other people to look at her models. She doesn't keep them proprietary. So yeah, when you look at a five-year time frame, she's beat Nasdaq by a wide margin, and
So
that's one
starting
that
from 2019, if we go, so like for example, let's say 2015, which she started her fund, we go back like up to like let's say for example the 5 year. So ARK actually returned 227%, and QQQ returned only 185%. And QQQ is a very aggressive. The return is amazing on this technology sector. So when you look at the 5 year, so she actually returned 200. So it's even more, than the QQQ by a wide margins, like almost 50%. Uh, so that seems to me like some sort of a fishy journalism, or not fishy, it's a questionable journalism, that they exactly select a period that she's lost, and then they come up with something that capture your attention and you click. But Cathie Wood herself says that you have to look at it at these are disruptive technology. They're not supposed to return tomorrow. So what is this huge run? So if you look at it, for example, starting from, let me actually see if I can actually go, from the inception all the way up to, let's say, sorry, all the way up to before pandemic, pre-pandemic. So pre-pandemic, she was beating, since inception, ARK was at 187%, QQQ was at 127%. And then the pandemic happens, obviously everything goes down, and then we're going to have the recovery. What was that? What's that huge recovery that, we saw? Let's say back to 5 years. What's this recovery from March 20 all the way up to this 600% return all the way up to peak of 21? What is that, Ali?
Yeah, this is kind of the double-edged sword, right? Because so much of her holdings were really disruptive, they started grabbing a lot of attention, and then a lot of the algos got behind it because of momentum trading. So that's pure momentum you see over 2020 until early 2021. And then, of course, when the momentum turns, when the tide turns, it's the exact opposite, right? So, just if you take last few weeks out, because the correction is completely correlated and it's because of interest rate. Before that, is purely just paying back that momentum play that was in 2020. So, yeah.
So I think what what we are seeing here, this is obviously a momentum. Just nobody dares to short, or the supply really is much smaller than demand, and price goes up, and obviously you can expect such a drop like that. But after that, for almost a year, it really traded in a range bound, and that seems like reasonable. And this drop that we're seeing here right now, it's the drop on obviously it's because of interest rate and everything is dropping. So looking at this chart, obviously this is just not her fault. So she shouldn't be responsible for this answering for this drop from 300% to 175% compared to Nasdaq. But people should see in a bigger time frame. And obviously what I see here, that when the fund started, it lagged Nasdaq for a couple of years, which kind of makes sense because these are disruptive technology. Yes, Ardi? So what are the holdings? What's the her mandate? Do you know about? I know you know about her funds. What's their mandates? And I know she's in Tesla, Coin, uh, Robinhood.
Yeah, so she got, I think, five different categories on AI, robotics, genomics, technology, and yeah, it's mostly companies that are either barely free cash flow positive, or expected to make profit in the future, and are truly disruptive. So Tesla is one of her biggest holding. Square, Coin, anything blockchain related, in genomics, Teladoc, companies in that nature, which got really overvalued during the pandemic, but now it's kind of normalizing. So, I mean, Andrew, here's another thing. It's not her fault that she became a famous fund manager in 2020 and everyone bought kind of at the top. I think she's being unfairly penalized.
Yeah, no, that's a very valid point. That when something goes up like that,
Yeah.
and it comes down, she's not, I think. And you mentioned that there's a lot of fund managers like Peter Lynch that they had some, extraordinary return, and they may, outperform a little bit in the next couple of years, which is normal. Yeah.
Yeah, no, we talked about this in After Hours with Traders, right? Like, same thing happened with Peter Lynch. Is everyone remembers Peter Lynch now as this legendary fund manager, but the truth is, if you look at year to year basis, there were some years that a lot of investors were struggling investing with Peter Lynch. You just had to stay with him from really the beginning all the way on to the end. And I feel like, I mean, of course, no one can predict the future, but I feel like kind of same thing is happening with Cathie, and it's quite interesting to watch it unfold.
Awesome. Well, thank you so much, Ardi. That was a quick discussion that Ardi and I had, and we thought that maybe we can just make a video. And so, what do you think? Community, YouTube, you give us a comment, feedback. What do you think? And if we'd love to hear your comments, and yeah, we'd love to learn from the community and YouTube traders and investors as well. Anything else, Ardi, you want to add? And we are, by the way, from Peak Capital office recording this for you.
Oh yeah, no, we would love to hear everyone else's comment. If anybody's investing with Cathie, we'd love to hear from you. Yeah, thanks, Andrew.